Are you curious about the inner workings of the stock market? Intrigued about what causes shifts in stock prices? Or perhaps you're simply scratching the surface, eager to understand the fundamentals of stocks. In our segment, we delve into the captivating world of stock markets, theories into easy-to-understand, bite-sized explanations. Get ready to journey into the fascinating realm of finance, where price fluctuations become meaningful and the essence of a stock is unraveled. Welcome to our introduction to the stock market and an understanding of what a stock truly is. Before we dive into what a stock is, let's take a brief look at the stock market's history. Originating in the 12th century, the concept has evolved over time. The Amsterdam Stock Exchange, established in the 17th century, introduced the practice of trading shares. Over time, the stock market became critical to global economy, reflecting a country's financial health. The advent of technology has broadened access to the stock market, enabling participation from anyone with an internet connection. As we move forward, understanding this history helps us appreciate the complexity and significance of the stock market in our everyday lives. Next, let's demystify what a stock is and how it functions as a piece of this vast, intricate puzzle. As we transition from the historical journey of the stock market to understanding what a stock is, it's important to note the shift from traditional to digital trading. Gone are the days of physical exchanges with brokers loudly negotiating prices. With the rise of technology, electronic platforms have taken over. These platforms allow anyone to trade stocks from home with ease. They provide on-the-spot data, aiding traders in making swift decisions based on market trends. Additionally, they offer tools for risk management and investment planning, making trading more user-friendly and efficient. This digital revolution has not only broadened reach but also quickened transaction speed. High-frequency trading, for instance, executes transactions in milliseconds, leading to significant gains or losses. As we move to the next scene, remember, the digital transformation has made trading stocks more accessible, but it also necessitates a good understanding of what a stock is and how the market operates. The shift from traditional to digital trading has revolutionized stock market accessibility. This digital shift has democratized trading, removing entry barriers and opening doors for everyone. No longer a domain for the affluent or well-networked individuals, the stock market now welcomes all. Thanks to online trading platforms and apps, anyone with a reliable internet connection can venture into stocks. This change has resulted in a surge of fresh, youthful investors entering the market. However, while these opportunities seem enticing, they come with their set of challenges. The convenience and rapidity of digital trading can spur rash choices, often leading to loss. Thus, comprehending the nature of stocks, their evaluation, and market navigation are crucial before plunging in. As we transition to the next scene, we'll analyze the true essence of a stock. Imagine owning a piece of a company you believe in. That's essentially what a stock is, a small piece of ownership in a company. When you buy a stock, you're buying a tiny piece of that company, hoping that the company will do well and the price of that piece will go up. Companies sell stocks to raise money for various reasons, such as growing their business, paying off debt, or investing in new projects. This happens in a place called the primary market. But once these stocks are bought, they can be sold to other investors. This selling and buying between investors happen in what we call the secondary market, which is what most people refer to when they talk about the stock market. Now, you might be wondering, what determines the price of a stock? Well, it's all about supply and demand. If a lot of people want to buy a stock, demand, and there aren't many stocks available, supply, the price goes up. If the reverse is true, the price goes down. But what makes people want to buy or sell a stock? That's where things get interesting. Investor sentiment, company performance, economic factors, and global events all play a part. For instance, if a company announces higher than expected profits, more people might want to buy its stock, pushing the price up. On the other hand, if there's a recession or a negative news about the company, Investors might panic and sell their stocks, causing the price to drop. The stock market is also divided into different segments. You might have heard terms like blue chip stocks, large cap, mid cap, and small cap. These terms refer to the size and stability of the companies listed on the stock market. Blue chip stocks are shares in large, well-established, and financially sound companies with a history of reliable performance. They are considered safer investments. On the other hand, small cap stocks refer to shares in relatively smaller companies and are considered more risky. In conclusion, the stock market is a complex machine powered by the collective behavior of investors around the world. It's a place where companies raise money and investors try to profit from their knowledge and insights. The price of a stock is determined by supply and demand, influenced by a myriad of factors from company earnings to global events. Understanding the stock market is not just about knowing what stocks are and how they are traded, but also about understanding the broader economic landscape and human psychology. So next time you hear about the stock market, you'll know that it's more than just numbers going up and down. It's a reflection of our collective beliefs, fears, and aspirations about the future. Remember, the stock market is not a game of chance, but a game of skill and knowledge. So equip yourself with the right knowledge, stay informed, and make wise decisions. After all, the stock market is not just about making money, it's also about understanding and navigating the complex world of finance.